Great. Welcome to the 27th Annual Needham Growth Conference. I'm Ryan Koontz. My team covers the space and communication sectors here at Needham. Really excited to have Rocket Lab here presenting to us today. Our CFO is Adam Spice. Welcome, Adam. How are you?
Thank you. Thanks for having me. Test? Yeah? That's working.
Thanks, Adam.
Yeah, thanks for having me. I feel like a little bit of a Willy Wonka making my way up here with the cane and stuff. I apologize. I had some Achilles surgery a few weeks ago, so still trying to bounce back from that. But excited to have a chance to speak with everybody today about Rocket Lab and what we're doing. We're a very unique story in the fact that we're trying to do quite a bit as a small company. You'll see, I think, some parallels with what maybe some other companies you're aware of. But SpaceX is probably the most obvious compare that we obviously get to get looked at from time to time. But why don't we run through some prepared materials, and then we'll save some time at the end for some Q&A. So is there a clicker? Is there? Perfect, thank you. All right, so I'll skip through the disclaimer and forward-looking statements. I think the biggest thing to say about Rocket Lab when we talk about forward-looking statements is it's a rocket company, right? There's a lot of risks, a lot of things can happen in our business, and I think I just always make sure that people understand the huge opportunity, but also not a trivial amount of risk involved in what we do on a day-to-day basis. I think the most important thing to really understand about what we're doing at Rocket Lab is we're known for launch, right? So we are the leading player in the small dedicated launch portion of the market. We'll talk a little bit about what that really is in more detail a little bit. But the vision for the company is much, much broader than that. It's really all about creating an end-to-end space company that takes advantage or builds a synergistic story where, if you have all these building blocks, you create a much more I would say, moat around the business that's harder to disrupt, creates a bigger set of opportunities. I remember when I was interviewing for this role about 7 years ago, I'd spent the prior 25 years in the semiconductor world and was looking to make a move into doing something a little bit different. I sat down with Peter Beck, the founder CEO, and said, what are you really trying to create here? Like, is your vision to be, because at the time we'd had one test launch of our Electron launch vehicle that we've now had almost 60 launches of. Actually, I think it's 58 launches. And if Pete had said, look, I want to create the most dominant small dedicated launch business, and that's really my vision, I probably would have passed on the opportunity. But when he said, look, I'm going to start with Electron, we're going to create a beachhead and a legacy in a very difficult market in the form of launch with that. After that, we're going to start building our ability to actually build spacecraft, our own spacecraft at scale, being very vertically integrated. And then ultimately, we're going to basically build a bigger rocket, which is now, we'll talk about that a little bit later, that's Neutron, which is a direct competitor to Falcon 9. That's going to have its first launch later this year. And then what we're going to do is, once we have that capability, we're going to basically create our own infrastructure on orbit so that we can create recurring revenue streams and be an end-to-end space play. And so with that, I thought, well, that's bold enough, it's ambitious enough, and it creates a big enough TAM where I think it's an interesting opportunity to attract attention and justify the requisite number of investor dollars it would take to execute that vision. So at this point, we have a rocket. We'll have 2 rockets a little bit later on this year. We've got spacecraft that we're building. We have customers that range from customers like NASA. We built a couple spacecraft that are ultimately going to map the magnetic poles of Mars. They were supposed to launch last year, but the launch vehicle in the form of New Glenn wasn't ready. So the kind of planetary window shut for efficient transport of those spacecraft to Mars. So those are pending a launch date. We secured constellation builds with MDA Globalstar for the direct-to-mobile opportunity that they're enabling. And then most recently, we won a $515 million contract with the DoD for the SDA proliferated LEO constellation with 18 spacecraft that we'll be delivering to the U.S. government customer in 2027. And those are, it's the first time we were actually awarded as a prime. So we've been subs, like we're a subcontractor on many things, but this was the first time we actually became a prime contractor to the US government for this opportunity. And we'll talk about the space data and services opportunity a little bit more as we kind of work through this. But for those that aren't familiar, so we've put over 200 satellites in orbit, over 58 launches. We actually have a lot of technology on orbit, not only from Rocket Lab organic development, but also through acquisitions. We've acquired 4 companies in our history to really build out our space systems portfolio of capabilities for subsystems, and we'll talk more about that later, about what that represents in the grand scheme of the business. We've got over 2,000 employees. We've got 3 launch pads. We're bringing this new launch vehicle to market. So I think it's a much more diversified business. When people think of Rocket Lab, they think of rockets, because that's the sexiest part of the business. But at the end of the day, we generate 70 to 80% of our revenue from non-launch related activities. So it's a much more diversified business than I think people normally appreciate. We are a globally diversified company as well. The company got its origins in New Zealand, but we've since branched out, and now we have the majority of our employees in the United States. We're spread across California, Colorado, Albuquerque, Maryland, Virginia, Mississippi. So we do a lot of things in a lot of different places. We still have a very significant presence in New Zealand. New Zealand's a very interesting market for us, not only because that's where we started from, but it provides very unique orbital access from the southern hemisphere. And last quarter, we actually showed the capability to launch from 2 different hemispheres within 24 hours. So I think the diversification across geographies is very important. Also, from a very competitive workforce environment that we deal with, the war for talent is real. Space is certainly a very attractive area for engineering talent, and we compete with the likes of SpaceX and some of these new commercial space station companies, plus the traditional primes and so forth. But New Zealand actually represents a very interesting opportunity to acquire talent from around the world at a pretty advantaged price point relative to the US. So if you look at our customer roster, it's going to look pretty familiar. All the logos you'd expect to see. We've launched for most of the US government organizations that you'd expect: NASA, NRO, DARPA, Space Force, and so forth. And then you also see some commercial customers in there. At the surface, you'll see that it's 50% commercial, and then the remaining 50% split government across civil and I would say defense. But really, if you peel the onion back one more layer, you'll find that it's probably closer to 90% of our revenues are really tied to the US government in one way, shape, or form or another. Because if you look at our commercial customers, pick whether that's a customer like a Black Sky, a Capella, Hawkeye 360, their customers are predominantly US government. Right? So yes, they're commercial entities, but their end customers are really US government. So I think that's a very comfortable foundation we think, to build the business, because there are a lot of hockey stick opportunities represented by commercial space, but really foundational, where the real money has been spent and continues to be spent, that's reliable and kind of targetable, is really on the government side of the house, both civil and defense. So we'll spend a little bit more time talking about the launch business. So we've got three different capabilities on the launch side. Electron, again, is the launch vehicle that's launched 58 times. We have a variant of that rocket called HASTE, which is targeted at the hypersonics test platform market. We had 2 of those launches for government customers in fourth quarter of 2024. So the way to think about Electron is the vehicle that delivers dedicated launch services for small satellites into LEO. So the vehicle can take 300 kilograms to low Earth orbit. HASTE is different. It doesn't actually deliver a payload to orbit. It delivers a different capability for the government to do hypersonics testing on. And then Neutron is the new vehicle that I mentioned earlier that's coming to market. So you go from 300 kilograms on Electron to 13,000 kilograms on Neutron in a reasonable configuration. So this really is our answer to the Falcon 9. And the market desperately needs choice. Right now, if you look at the medium launch category, it really is dominated by Falcon 9. And certainly the US government customer wants and needs choice. And in the commercial market, they also need choice, but for different reasons. With the commercial market, there are some customers that compete with Starlink, and it gets increasingly uncomfortable to have your launch dependency upon kind of an application that competes directly with your business. So having some separation there is a healthy thing, and something that the market is showing a strong demand for. This is just, again, kind of the pictorial of all the launches that we've gotten off. Again, if you look at the pecking order of launch providers, SpaceX launched, I think, 135 missions last year. We were the second most frequently launched vehicle in the Western world with 16 launches. So there's still a fairly large gap between that. But when you look at the number of Falcon 9 launches, the vast majority of those were actually Starlink, so internal consumption of their own service provision. So we are continuing to narrow that gap, but we've got a very capable competitor that we're chasing in this market in SpaceX. When you look at the broader set of competitors, you obviously have SpaceX. We've talked about ourselves, Rocket Lab. You've got ULA. You've got Blue Origin with New Glenn, and then Ariane 6 would probably be the one to round out that set of competitors on the western side of the launch market across medium and larger launch. We have a unique set of infrastructure capabilities. We have a privately owned and controlled launch range in New Zealand. And some people think that, well, why New Zealand? Part of it's a function of the fact that the company was founded there and our founder CEO is a Kiwi. But it also provides very unique access. So you don't have the range congestion, obviously, with a privately controlled range. You also don't have a lot of air traffic and sea traffic to clear when you want to launch in New Zealand. So we have the ability to launch 128 times a year from our New Zealand facility. We've got 2 pads. So that's really unparalleled launch access compared to what most people have to deal with when they're competing for slots on US government-controlled ranges. And then we also have a range at Wallops Island, Virginia. It's a NASA-controlled range. And that's primarily focused on our US government customers where, in an ideal situation, they prefer to have their payloads never leave US soil. It's also right in the backyard of, the US government customer as well. You don't have to travel, 16 hours across, the Pacific to get there. So, but having that New Zealand and Virginia presence is actually a very strategic asset. You can think also scenarios in which, the US government is very interested in having launch capability out of the South Pacific. So very strategically located and a lot of capacity to grow into. So Neutron, as I mentioned, that's the next vehicle that's coming into our quiver. Very different in some ways, but very similar in other ways. So we're leveraging a lot of the technology that we brought to market with Electron on Neutron to buy down risk. So there's a few areas that are very clear kind of de-risking capabilities. One is the fact that Electron was the first carbon composite structured vehicle. So our tanks are made out of carbon composite materials, much lighter than stainless steel or aluminum tanks, about 40% lighter, which allows you to do, obviously carry for everything you save on the vehicle mass, you can put that towards payload capability. So very important. And then avionics, it's something that we're also carrying forward largely from Electron to Neutron. So buying down a couple of the real key risk areas. Probably the biggest difference between the vehicles, other than one is capable of carrying 300 kilograms versus 13,000 kilograms, is the propulsion side. And propulsion is typically the long pole in any rocket development program. The engine's got to work. It's the trickiest piece of technology. And last summer, we got through one of the major kind of risk items and de-risking with our Archimedes engine hot fire results. So I think that started also get a lot of attention from people who were following us was just the fact that, okay, once you have an engine that seems to be working, then you've kind of crossed a major point of risk and you can start to have a lot more line of sight towards kind of when the vehicle could ultimately hit the pad. That also tends to unlock customers' commitment to building your manifest. Until you have at least a working engine, it's very difficult to get customers to kind of commit to it. Because the one thing when you're in this business, the customer and the launch provider are doing this very kind of codependent dance, right? If you're the launch provider, what you don't want to do is kind of fill up a manifest with risky customers that might not deliver spacecraft on time. Because the last thing you want to do is spend hundreds of millions of dollars in years to bring a vehicle to market only to be waiting on the pad for the spacecraft to arrive. And on the other side of that, if you're a satellite operator, you don't want to commit to a rocket, pay deposits, build your commercial model on getting your assets put into operation, only to kind of wait for years for that rocket to be delivered. And unfortunately, the nature of our business is such where rocket delays are frequent. If you look at the New Glenn rocket that's sitting on the pad right now for Blue Origin, that was supposed to launch in 2020, right? We're in 2025 and it still hasn't launched. So that kind of gives you an indication that things can have kind of long development tails and have risk entailed to it. Unfortunately, we've so far been pretty good on holding the schedule. When we came public in 2021, we put an end of 2024 launch window. We've since had to push that to the middle of 2025. But 6 months is painful. But in the grand scheme of traditional rocket program delays, we're very much still in the sweet spot. And we're also doing it on a cost point that has never been done before. We're bringing this rocket to market for around $350 million. And when you compare that to other vehicle programs that are in the billions of dollars and take a lot longer. I think we're doing some pretty amazing things. So we're very excited about Neutron. It's a huge enabler on a few fronts, and we'll talk about that a little bit more in some following slides. So again, this is just a little bit more color on how we compare to some other programs that we've seen historically come to market. And again, we think we stack up very favorably there. And when we get Neutron to the pad later this year, it's going to set a new standard for the cost effectiveness and timeliness on the development side of a new rocket. At Rocket Lab, but one thing that I think this is distinguishing for us versus some others is that we're very vertically integrated. We're not just a technology integrator, we're a technology developer. So, if you look at our Electron launch vehicle, carbon composite powders come in the factory, and metal printing powders like Inconel and so forth come in, and then out the back end comes a rocket, right? So we're probably 90% vertically integrated, which is very different from most other models that have a lot of dependency upon subsystem providers delivering, which can often lead to schedule delays and cost overruns and so forth. We really own all of this. So everything you see here, we build stuff ourselves. We have very little dependence on third parties. And I think that's one of the key factors that gives us confidence in our roadmap and our being able to deliver to our customers. So as I mentioned, one of the key unblockers of schedule for Neutron and bringing that to market was really getting that Archimedes hot fire engine test behind us in August of last year. So that was a very big deal. And what that, again, did, it allowed customers to start kind of working with conviction towards launch dates. And so recently we did announce our first two launches for Neutron with a commercial customer. And again, I think as we progress and knock down more of these development milestones, you'll see more customer commitments coming forward. And now the goal is just about kind of selling out the manifest that we've kind of published, where our schedule is we'll have a test launch this year, which won't be carrying customer payload. And then you'll have 3 commercial launches or paid launches in 2026, and then 5 in 2027. So it's just building kind of into the rocket's cadence. And the one thing that we've learned is that in our business, it's a very high fixed cost oriented business. So cadence is very, very important to absorb all those fixed costs. And that's really what's helped SpaceX build kind of their dominant position in launch, is the fact that when you're launching something 135 times and you're reusing boosters up to 25 times per, that really brings a lot of economic power to their model. I did see a report the other day that was pointing to the estimated, and I can't tell a lot about SpaceX because they're private, but one estimate was that they're generating about 70 points of gross margin on their Falcon 9 launches at this point. So I think there's definitely a path to very healthy margins, and we'll talk about kind of where we're at right now in our progression and where we think those are headed. But before we get into the financial details, I want to talk about the other segment of our business, which is space systems. So again, this represents 70 to 80% of our total corporate revenue comes from space systems. And that really comes from a few different elements, right? Today we have 2 of these 3 pieces in place, and we're working on the third. But if you think about our business, we have a subsystem business where we sell picks and shovels to the other satellite manufacturers. So customers like Lockheed, Northrop, Airbus, York, all these folks that buy things like solar cells and solar panels and reaction wheels and star trackers and radios and battery systems and so forth. So that's about half of that 70 to 80% of the revenue mix is coming from that merchant market for space systems, subsystems. The other half of the business comes from actually selling more platform solutions. So when I say a platform, that's where we deliver either a complete satellite bus or we sell as a prime the complete satellite solution to the end customer. An example of each would be, for customers, for example, we've acted as a prime for NASA for several missions on building full spacecraft solutions. Our DoD contract for the SDA Tranche 2 Beta award, that's as a prime, as I mentioned before. Others where we provide a bus would be example into Globalstar MDA, where we have a contract to deliver full bus solutions to those folks. So about half of our space systems comes from selling picks and shovels. The other half comes from selling complete solutions to the customer. And then the third leg of the stool that we're working towards is, again, kind of similar to what you see in the progression from SpaceX, where they got themselves into position because they had the ability to manufacture spacecraft at a cost point and pace and launch those spacecraft because of their unique capabilities on the launch side. they actually have come in very strongly and to create a new application to grow their business. And that's really, once we have similar pieces in place with Neutron, we believe we'll have the similar capability to do the same thing and build a recurring revenue stream, third leg to our space systems business. Across our space systems family, we have a variety of spacecraft. It's not just kind of one size fits all. You'll see that Explorer version of our platform. That was the version that's interplanetary. We were actually the first part of the Artemis mission where we sent a comms relay into an orbit around the moon to establish the fact that there is a stable environment to put a space gateway, if you will, a lunar gateway. And then there's different variants. Pioneer is an experimentation platform where actually this is what's being used by Varda Space to do in-space manufacturing of pharmaceuticals. And so I believe today, actually, the second Varda spacecraft that we manufactured was being launched on a SpaceX Transporter 12 mission. So I haven't seen the status of that, if that has been in these meetings all day. Hopefully that went off successfully. Did? Excellent. And so we're responsible for not only building the spacecraft, but actually operating it on orbit and then re-entering the capsule with the produced materials on orbit. We returned the first capsule, I think it was in the first half of last year, successfully into the Utah desert. And we're looking to return this next capsule as well, sometime later probably in the next several months. Lightning represents our comms platform, and that's the variant that's being used for not only the Globalstar MDA that I mentioned earlier, but also the SDA. So that's kind of the primary foundation for that. And then Photon is really more for kind of the hosted payload, small platforms that you can actually use our kick stage of our Electron rocket and turn that into a satellite, very cost effectively. I mentioned earlier, one of the key differentiators for us is the level of vertical integration. I mean, we believe this is the model for success going forward. We think that just being an integrator of other people's technology is not the winning solution, particularly as the government pivots increasingly towards commercial acquisition strategy. We're finding that we're positioned very, very well relative to our legacy primes that really rely on other people to provide them the subsystems, and they just kind of literally just pull everything together, bundle it together, and package it. Oftentimes we find ourselves competing for platform opportunities against those customers that have to come to us for subsystems into their bids. So it gives us a very unique perspective about how to position ourselves relative to the competition to win some of these opportunities. So not only are we very vertically integrated on building rockets, but we're very vertically integrated on building the spacecraft as well. And again, we think that provides a huge advantage. It's not easy. I think it's required several acquisitions and a lot of organic internal development, but we really see it paying dividends now. As if you look, I'd say 5 years ago, it would have been very unlikely that a company as young as Rocket Lab would be given a $500 million DoD satellite build contract. And the primary reason we believe that we won that was because of our level of vertical integration. So ironically, kind of a newer, younger company represented less risk than the more established traditional primes as far as delivering to those programs. Through our organic development plus the acquisitions, we've got over 1,700 missions in our history. It goes all the way to some of the most challenging missions, the James Webb and the Mars rover programs and so forth. So we've picked up decades of legacy technology through acquisitions, and then over the course of the last 5 years, we've really developed a lot of our own capabilities organically. So we cover a lot of space, literally. So we also have a lot of missions that are in formulation right now. A lot of work that you can see the backlog here. We've got over 40 satellites in backlog right now. If you look at the dollar value in our backlog, we've got over $700 million of contracted backlog for the satellites. And then of course we have the subsystems backlog and of course our launch backlog as well. This is just a view of what our space systems satellite business itself from a platform solution looks like. So I'll briefly talk about some of our financial highlights and what our profile is, because a lot of people are not that familiar. So these are the results that we posted for our Q3 quarter. So we're able to crest the $100 million per quarter revenue threshold. We're increasing our gross margin profile as well. So we've been successful as we gained leverage in the business to deliver not only kind of an expanding gross margin, but help fund a lot of that heavy R&D lift that's going on right now through our Neutron development program. So we're spending about $150 million a year on Neutron, bringing that to market. And again, that sounds like a lot. It is a lot. I don't want to diminish that investment level. But it really is very, very, I would say, modest in comparison to pretty much anything else anybody's ever tried to bring to market before. So we've got expanding top line. We've got an expanding gross margin line. And as we get Neutron delivered to the pad, we will pass this big R&D bubble, which creates a big inflection point for our P&L, because now you go from flowing a tremendous amount of R&D through the model to now you've got revenue cover as this goes into production, and of course once you get to minimum viable product on the rocket, where you've got a pad that can support a launch and you've got a vehicle that can that can go into production, R&D gets cut pretty dramatically. So I think we've got kind of an upcoming inflection and kind of milestone financially once we get Neutron to the pad later this year. A little bit on the backlog. We exit the quarter with over $1 billion of backlog. The split of that backlog looks very similar to our current revenue split, where call it 75% of our backlog or more is tied to space systems, and the rest to launch. I think we had a very good year in 2024 for building our launch backlog. We exited Q3 of 2024 with 39 launches in backlog, with an expanding average selling price. So we've been able to grow our backlog and launch while actually expanding our ASP as well, which I think just speaks to our position in the market. A lot of people 5-6 years ago were saying launch was going to become a commodity. It's done the exact opposite. When I joined, we were marketing Electron at about a $4.9 million price, and now our backlog is priced around $8.4 million. And we see upside to that over time as well. We have been investing at a pretty aggressive rate. Almost all of this R&D intensity that you see in our model is really coming from Neutron. Fortunately, on this, if you look at Electron, it's now a pretty mature product, having launched almost 60 times. So that's got very low R&D commitment to it. Space systems in general doesn't have the same level of R&D intensity as the Neutron development program does. Most of the R&D associated with our space systems business is customer funded. So again, most of this R&D is going to get, I would say, lightened once we get past that first test launch of Neutron. Our cash flow and adjusted EBITDA track pretty closely. Our biggest non-GAAP kind of exclusion would be our stock-based compensation. We do run about $60 million a year of SBC. Kind of the war for talent is real. Compensation is a key part of how we attract and retain our team. So we also like to make sure that everyone's interests are aligned. So we're a very equity-centric company where if shareholders do well, employees do well as well. And then the guide that we provided for Q4 was very strong growth off of Q3. So revenue between $125 and $135 million, continued expansion on the gross margin line on a non-GAAP basis. We'll continue to invest again aggressively. We're not going to really get the benefit of lifting our foot off the R&D process for Neutron until we get to that first test launch off the pad in the middle of this year. But I think, fortunately for us, we're in a very enviable cash position. We exited Q3 with over $500 million of liquidity. So we feel like we're financed to the point where we can continue to invest in all the right areas and not have to make some of those difficult choices that would maybe cannibalize some of the longer-term growth due to lack of capital. So I think with that, I've left a few minutes for some Q&A.
You haven't mentioned Boeing as a competitor. Where do they fit in vis-a-vis the company?
So we do compete with Boeing in a few areas. So for example, we have the largest compound semiconductor solar operation in the Western world in the form of the company we acquired called Solero, and they have a division called Spectra Lab. So we do compete at the subsystem level in some areas. We obviously don't compete directly with them in other areas. They're really more focused on the larger exquisite satellites versus the low Earth orbit, small satellite side of the market. They do have Millennium, which is a product line which is focused on the smaller satellite side of the market. So I'd say that's probably where the most direct competition would be with Millennium and then maybe on the solar subsystem side of things. But I would say that, it would be fair to say that we don't wake up and worry about Boeing on a daily basis. That's not our biggest competitive focus right now. I'd say what pretty much dominates our competitive view would be really SpaceX is probably, again, we wake up every day trying to figure out how do we compete with the likes of Elon. And it makes for some interesting moments for sure.
You kind of segmented, you showed small launch capacity of 300 kilograms and then you jumped to 13,000 kilograms. Isn't there like a sweet spot in between 300, like under 1 metric ton around there? And how big is that opportunity? Is that something you'd like to address?
Yeah, so I'll repeat the question a little bit. So the question was, we currently play at 300 kgs. Neutron is going to 13,000 kilograms. Isn't there a sweet spot in between there somewhere? And I would say, look, we've now had 6+ years or 7 years of experience in the small launch side of the market with Electron at 300 kgs. And we really don't think that we've missed a lot of opportunities for not being a little bit larger, let's say the 1 ton, because there are some 1 ton players. You got Firefly that plays in that area. ABL was trying to be in that part of the market, but exited it. We just don't think there's a lot of payloads that are larger than 300 kgs that represent a meaningful opportunity. And at 1 ton, we believe you're too small to be a competitive rideshare vehicle versus a Falcon 9. You're too large and expensive to be an effective rideshare competitor versus Electron. So it's kind of an awkward tweener place in the market to be. And also, we designed Neutron at the 13,000 kilo size because the market has really been coalescing. Like, if you're a satellite operator, who would you be designing your satellite to fit best on? Probably Falcon 9, right? It's because it is such a dominant position in the market. It really has a monopoly in that medium class launch. So if you're going to displace some of those payloads, you've got to be competitive with that vehicle, and that's what really Neutron was designed to be, is really kind of almost a substitute or swap in for the Falcon 9. So hopefully that addresses your question.
You talked about the price of the launches actually going up and not commoditizing. Is that just demand, or what's going on?
Yeah, so the question was around why do we see the average selling price, going up, and for Electron, and I would say it's a function of the fact that if you rewind the clock 5-6 years ago, I've been with the company now for almost 7. There was a lot of wishful thinking in the launch business, and there was a lot of, in coming out of the semiconductor market, I was used to the term slideware, right? A lot of slide influenced, pricing pressure. At some point people need to deliver, and there's been relatively little execution in the rocket side of the business. So, you can talk about low launch prices, and we had companies that were out there touting 300 launches per year, which we knew was absolute nonsense and completely non-credible. But customers would actually buy into that from time to time, and there are still some people out there who are aspirational launch providers that are giving really unrealistic targets and costs and cadence and all that kind of stuff. But again, the beautiful thing about this market is ultimately you got to put stuff on orbit. And so if you have a record of delivering stuff to orbit consistently and reliably, there isn't much incentive to switch to an unproven platform, because the risk of having an anomaly or not getting your spacecraft in orbit are much worse for you as an operator than to try to save a couple $1 million on launch. Right? And so we think we've pretty much squeezed out all of that risk trade on the Electron side of the market. And so now we've got some pricing control, because there's really nobody that can come close to our reliability and cadence. So we've got itself in a sweet spot. I mean, that does beg the question of what creates the opportunity for Neutron, because Neutron's a new unproven vehicle. You do have Falcon 9 in the market, which is incredibly predictable, very effective vehicle. But I think that comes down to the fact that the government customer really, really wants diversity of supply. They can't just have one supplier control that important part of the market. And I think in the commercial side of the market, you've got customers that are relying upon a competitor to put their stuff in orbit, right? So if your constellation competes with Starlink and you're basically having to rely on SpaceX Falcon 9 for launch, that's got to be a very awkward, uncomfortable place to be. So we really represent kind of a new capability coming into market that is not as scary as that. Now, longer term, if we're successful in pursuing our own application aspirations, we'll create a similar dynamic. But at the end of the day, the customer doesn't have a lot of alternatives, because unless they want to build their own launch vehicle, which very few organizations in the history of mankind have been able to build reliable launch vehicle, they really don't have a choice. So that's why we think, people who've established launch capabilities and kind of gotten reliability, new entrants coming into the market are very, very difficult. I mean, the people you see coming in the market now, like Blue Origin, right? It's self-funded by one of the richest people on the planet. You don't see a lot of kind of new companies that are kind of putting attractive kind of vehicles forward because it just costs a lot, it's tremendously risky, and there's already existing capabilities on the market that don't provide a really good kind of risk trade. Next question.
Can you talk about the shareholder base and how that's changed over the last 3-4 years? Your stock is, a fraction of the valuation of SpaceX. So I'm wondering if you're seeing more interest from people who want to get exposure to the group, but also can't play SpaceX existing growth.
Yeah, so the question is really around kind of what are the evolving dynamics of our shareholder base, and how does that kind of set up relative to SpaceX's kind of valuation and I'd say accessibility or actionability as an investor? Look, I think since coming public, it was largely we've largely been I would say a retail headline driven. I mean, there's a lot of passion for space, right? So, it's kind of when we have to get ready for our to mail out our proxies and stuff like that, I was shocked at how many shareholders we have. Right, it's orders of magnitude higher than most companies with our similar market caps. It's because we're very, we're spread across a lot of retail. Probably 50% of our volume is retail. I'd say the majority of the remainder of it has historically been fast money, hedge fund types. I would say that over the course of the last 6 months, particularly once we got past the hot fire engine test milestone, we started getting a lot more attention from your more traditional kind of long onlys. And recently, we've seen people establish some positions that we were hoping to get into the name over the last few years. I think one of the things that also kind of there's obviously the stock price has moved a lot in the last 6 months. We were trading for $4 for a long time, and then we've now popped up into the 20s. And I think part of that was as we de-risked Neutron getting to the pad, again the engine hot fire being the biggest milestone towards that. I think people started to look at SpaceX with a private valuation of $350 billion. You've got people talking about potential IPOs at much higher valuations than that. And so what should the ascending aspirational number 2 player in this market, what should that valuation delta be? I think once we have Neutron, we're starting to play in very similar sized markets. I mean, right now, the small dedicated launch market is much smaller than the larger launch market, but that gets equalized with Neutron. The application market has been a huge leg up for SpaceX and their valuation. But once we have Neutron, we now have the ability to do what they do, which is build spacecraft and deploy spacecraft to orbit at a cadence and a cost point that's going to make us very, very interesting from an applications perspective. So I think now you start to look at when we were trading for we had a $2 billion market cap versus $350 billion. Now we certainly crept up north of $10 billion, but there's still a huge valuation discrepancy between the two firms that are chasing very similar opportunities. Granted, SpaceX has a 10-year lead on us. They started in 2003. We started in 2013. But our focus is on how do we close that capabilities gap, and as we do that, how does the valuation gap converge as well? And I think that's started to resonate quite a bit with investors and get a lot more attention. Question?
So from the demand perspective, how many of the satellites that are up there do need to be replenished on an annual basis? And how much do you think that's going to change 2 years from now, 5 years from now?
Yeah. So the question is around the satellite replenishment. So with this LEO proliferated architecture that's taking hold not only across commercial markets but also government with SDA, for example. I mean, if you're in the business of building satellites and launching satellites, it's a very, very healthy dynamic because these satellites often are designed to stay on orbit for 3 to 5 years. So you got this virtuous cycle where you have to build a lot. So rather than have a handful of exquisite assets that basically stay up in orbit for 20 or 30 years, you now have hundreds or thousands of satellites that have to be replaced every 3 to 5 years. So it's a very, very different chain, a very different set of dynamics for satellite manufacturers and also satellite launchers. And that's quite encouraging. And if you look at, for example, the larger constellations coming to market, like Amazon Kuiper, for example, right? They need to deploy over 3,000 satellites over the next 3 years, and then they got to replenish that constellation on a recurring basis, which provides a lot of demand, into the market. And as I mentioned before, there's not a lot of supply right now on the launch side, and I don't think there's going to be a whole lot of incremental supply just because of the challenge and complexity. I mean, a lot of people have tried, a lot of people have broken their pick, on trying to get into this market. So it's once you figure it out, I think there's a huge upside opportunity for people that can execute and capitalize on that.
Really great. Please join me in thanking Adam and Rocket Lab.